All right, thanks for joining us today on the Tradehacker podcast. We're joined here by ChingasX. He's a trader, educator, content creator, node operator, and the spokesman for arguably one of the top Twitter profiles and now trading tools online, Trading Room, as well as a member of the Daily Chain team. Chingas, welcome. Thanks so much for joining us.
Thank you so much for having me. I appreciate it.
I appreciate you being here. So, give us a little bit of a lowdown. We obviously follow you, and you've got your own Twitter profile, and you're a big part of the Trading Room Twitter profile and team as well. But for those who aren't familiar of who you are on YouTube and Twitter, give us a bit of about you and your background in trading and getting to where you are now.
Background in trading goes back many years ago as far as trading, but that was mostly investing way back then, and that was slight options, some stocks. Nothing too crazy or technical. I sort of found my TA or my love for TA after entering the crypto market, which was about a year and a half ago now. It was just about bull run time. And from there I got in, and I wanted to learn everything I can. So as soon as I got in, I got my feet wet. I got hit pretty hard. I think a lot of us did who entered at that same time. And it was hit the books and figure out what I did wrong. And I haven't stopped since. So for me, it was learn as much as I can. And as I met more and more people that were in the same situation as me, I tried to share as much information as I learned, which would help them. And that turned into, doing some educational things and putting some videos up on stream, sort of help out the new people as they come in. And as I got more advanced, some of the videos got more advanced and some of the trading got better. And it evolved into sort of an educational platform, so to speak. Trading Room reached out to me and he liked the educational material, and he was working on the Trading Room app and said, hey, maybe we could do something together here. maybe you can educate the people on the app. And I said, absolutely, I'd love to. So let's take a look. And that's kind of how it was born. And that's sort of where I'm at right now is, I do as much educational stuff as I can on stream, and I do as much educational stuff as I can for Trading Room. And that's it. And I'm just a regular guy who loves to trade. I got a passion for learning. I got a passion for teaching, and I got a passion for crypto.
Yeah, I think the passion for teaching thing is really prominent, and you and I have been talking for a little bit before we jumped on. And like I said, you do multiple hour live streams where you're going through your charts and talking about the space as a whole on YouTube multiple times a week. You've probably already got hundreds of hours on YouTube. You post a bunch of stuff on Twitter. You maintain a normal life. You find time for trading. You find time for Trading Room, and you're doing it. And you're doing it all off your own back. And that's something that I empathize with, because we're doing the same thing over here at UTG. But the fact that there's guys like you in the space help people like me when I first started trading around the same time a couple of years ago, and all these new people in the space, it's becoming easier and easier for them to learn from the mistakes that guys like us make, because of people like you who are out there giving away all this free content and from real traders. You're not just someone who's just jumped on and 25 minutes later they're a Discord owner and they're punching out educational content, which we see so much. But
I got some battle scars.
I think we all have, and there's no doubt every single person with an iota of experience in trading has been destroyed at some point. When they first started out, they make the emotional mistakes, they make the trading mistakes, the fundamental mistakes. So for anybody listening, whether it be audio or on the video right now, you got to reach out to Chingas on Twitter or YouTube, because the content that's getting provided there is going to save you time, money, and a lot of heartache. You spoke about you've been in this space for a little while now. How would you describe your trading style, and sort of what are some of your go-to strategies when looking for trades to avoid those beginner mistakes? How have you refined what you've got now?
So when I first started trading, I had no clue what I was doing. And then, I leaned on the fundamentals, thinking that I was going to buy something and it was going to, all of a sudden do 30%. I didn't understand the market cycles. I didn't understand how market structure, price action, or any of that stuff worked. So as I've refined knowing nothing to knowing what I know now, I've sort of leaned into trend trading, range trading, and pattern trading, which is all part of just price action. So for me, I might see like a rising wedge, and I might let it play out a little bit, and if it breaks up or down, you know, I might buy the retest. If we got something in range, and range has been, you know, 60 days, 70 days, 100 days, 120 days, and I start seeing a good couple moves, you know, volume starting to increase, there's more liquidity coming in, and I see a nice push, a nice break out of range, and it comes back to range, I might buy the retest. So, you know, I'll be a breakout trader, I'll be a trend trader, I'll buy the pullbacks, up or down. So if you're going to short something, you know, you take the retrace, you're going to long something, you take the pullback. And that's sort of what I've narrowed myself down to, which is fine. I'm absolutely cool with that. I spent some time with Ikimote, the cloud. Forgive me. I love MAs. MAs are great, but you know, when it comes to horizontal support resistance and market structure, those things really tell you a lot of what you need to know. And I'll use other indicators such as, you know, I'll use MAs all day long, but it's as confluence. You know, it sort of gives me the idea, okay, this makes sense. It matches my fib levels. This is good. It matches, you know, swing highs, swing lows. These are great. You know, we've been going in trend. We broke trend and, you know, historical trend lines, and all that stuff just sort of wraps itself into my trading style. I'm not 100% sure what it is. It's just a crossbreed of price action with trend trading, range trading, pattern trading. I love harmonics. So I'm a little bit all over the place, but it just allows me to look at a chart and say, what do I see first? Yeah. You know, and the obvious thing that I see is probably what I'll start leaning into. And if a setup is there, then great. If a setup is not, I just move on. You know, just try to find something that has a setup.
Yeah, and I know it's so common with a lot of guests that we talk to is, I know one big mistake I made when I first started trading was putting 50 indicators, 50 tools, 400 lines. You know, like I said to Cole Garner last week, you know, my chart looked like a Jackson Pollock. It's like I've just smashed lines and stuff all over it. You know, you wouldn't know which way it's going, but
I got some of those.
Yeah, I think we all do. But, you know, I think that's such a big thing for beginner traders in particular, is just to keep things simple, isn't it? You know, start with your horizontals, your support, your resistance, your basic trend lines, and then you can, you know, play with your Ichimoku or your fibs or whatever it is, and look at volume as a consideration. You know, volume precedes price.
I've noticed that it's impossible to teach that.
You've got to make your own mistakes, don't you?
Yeah, well, yes, you do. But there's something about trading where once you start, you feel that need to cycle through every indicator, because no matter how many times everybody tells you there's no one strategy, there's no one indicator, there's no one thing that'll be profitable 100% of the time. And no one, I don't care who you are, will ever listen to that. so they have to, you know, they just have to. And I try to teach people, when I teach people harmonics, I said, look, just learn one. Just learn Gartley. And when you know it and you're comfortable with it, then move on to the butterfly and the bat and the cipher and the crab. You know, then you can focus on all the others because you have a correlation there. You know, it's a failed Gartley, but it could be a butterfly. Or you didn't hit the 618, but now you hit the 786. So now, you know, a butterfly is looking good as opposed to a Gartley that's now failed. It's the same thing when they first start. I say, don't load up the chart. Don't put 1,000 indicators on there. Just look at the chart. You know, look at the candles. And I try to tell people, focus on what the candle tells you. Right? Every single candle tells you something. It's got 5 parts. You know, it's like a little war happened inside of that candle. Understand that. Right. Move on to structure. You know, what was your last high, or why did price reverse? Why does that level make sense? And then you could dive into, check out the RSI, look at the MACD, Look at MFI, CCI. Look at these things and see if they have some sort of relationship with you. You know, maybe you love it, maybe you hate it. There's guys that'll play the cloud and that's all their play, and it works great for them. You know, and if it works great for you, then that's what kind of trader you are. You're a cloud trader, and you'll find a way to refine it and have it make more sense. And if they learn more and more and more about it, they'll realize the cloud is heavily based off of Fibonacci levels and Bollinger Bands. You know, there's a lot of hidden things in there that you'll only know once you discover for yourself. But I made the same mistake, man. I cycled through 150 different indicators. For me personally, I wanted to learn them. And I did, and there's a lot that are just useless, or they're very good for one very specific strategy on one very specific time frame, and that is it. And only when the market is either trending up, trending down, or sideways. So it was like, you know, it's really good for this one very specific situation, and other than that, it's garbage. So everybody has to find their own way. They have to find what kind of trader they're gonna be, what resonates with them. And as far as indicators go, it's sort of like, what kind of confluence are you actually looking for that'll make you say, I'm going to put skin in the game?
Yeah, that's 100% right. And that's exactly what we say to people that ask us the same questions. You know, stop trying to confirm your own bias by putting 100 different things on there, and just start with the simple stuff. You've got to start with a foundation. You can't live in a house when it's just a structure. You know, you've got to build the bricks. You've got to put all the fiber, you know, the fibro and the electricals and all that sort of stuff there to have a real sort of structure. You can't just bang it all on and expect it to work. So no, that what you've just said there, I think sums up what 99% of beginner traders need to adhere there. So kudos. But
I wouldn't say if I didn't go through it.
Yeah, that's right. Yeah, likewise. And I think that kind of leads us pretty perfectly into this next question, which you've kind of already answered. But you know, you do interact with a lot of people on crypto Twitter. You're quite a well-known figure now. You know, multiple thousands of people follow you. But you know, what are some of the? But besides that, what are some of the more common mistakes that you see newer or even some of the more experienced traders making when they are trading? And there's a lot of them.
Well, all right. So the biggest thing for me is patience, right? And with that is rushing entries. And I see that a lot, and I see it on a lot of charts. I see people getting into trades, you know, during a pullback, and it's just let it come down. You know, if it comes down and you find support, that's where you want to buy. So rushing entries is one of them. Not using a stop loss, it kills me. Which leads into risk management, and that's probably my number one beef that I see more often than anything else, is people trading too large of a portion of their capital on one trade and not using proper risk management. So I'll see tweets about, you know, not so much the last few months have been pretty bullish as far as alts are concerned. But prior to that, it was, this guy's losing 15%. This guy lost 20%. This guy got hammered for 60% on a trade. There's no way that would happen if, one, you got liquidity, and two, you're using a stop loss. I mean, yes, there are situations where your stop loss doesn't get hit, but, you know, to not fundamentally understand what your risk reward ratio is on a trade, it burns me, because it's the least sexy topic in all of trading, but it is probably the absolute most important topic for the very reason that it's what keeps you trading. You know, if you lose a trade, you still have capital to trade, and without it, you don't. And you're either waiting for the next paycheck, or you're waiting for to hit the lottery, or to sell your car, whatever the case may be, to get yourself back into the trading game. And it shouldn't be like that. It should be a little bit more responsible, you know. So you go to take that trade and you say, all right, well, I'm going to risk, you know, losing 2% of my capital if I get stopped out, but the reward is, you know, 2 times that. So that's good. That's great. I'll take trades that are only 2, 3, 4%, which I'm not complaining about. That's fantastic. I'll take 2% all day long. I don't need, I mean, I would love 100, 150, 200% trades, but you need to be realistic. If you want to do this on a day-to-day basis, or if you want to do this for a living, you're not going to find 150% trades daily. It's just not going to happen. But you can consistently find 2 to 5, 5 to 7, 7 to 12, depending on the market, depending on the assets and how they trade. But you're not going to win them all. No trader ever does. So as long as the ones you lose, you only lose a very small portion of your capital, then you're in much better shape to cover those losses on the next trade. And that's probably the number one thing, the number one mistake I see a lot is either no risk management or just improper risk management.
Preach. It's
just so boring to talk about. Nobody wants to talk about it.
Yeah, that's right. Like what you said, it isn't sexy, but it's the foundation of a good trade plan. You always got to have a stop loss in place. Move your stop losses up as you're in profit. Have a proper risk management strategy, and it's pretty baffling how many people don't subscribe to that. Probably not because of probably just they're unknowingly ignorant to it. They just haven't taken the time to research it, or why else would you do it? I did it in the beginning, no doubt. I did it in the beginning, and I lost a lot of money because of it. But I think it baffles me how many people still do that.
Yeah, I mean, it goes back to what we talked about prior to this, but back into the emotional game. There's two types of emotions. One, you could be emotionally attached to the project or the coin or whatever, but the other one is you're emotionally attached to the trade. Just human beings don't want to lose. You don't want to say I've lost 10% on this trade, so I'm going to bow out. You just don't want to say that. So yeah, in the beginning, you would say, well, it's going to come back. It's going to come back. And then it's 20% loss. And you're like, oh, well, there's still a chance. And then it's down 30%. And then you got to start saying, well, maybe I've lost too much to even close it now. I'll just wait. And then it's 40 and 50 and 60. And take a look at the charts. 85, 90, 96% lost from all-time high, or from when you bought, right? And at that point, you're like, wow, there's absolutely no way I could sell now. I mean, I've lost so much. If it comes back, it comes back. But that didn't have to be the case. You were just emotionally attached to the trade. You didn't want to lose, or you didn't want to say that you lost. But the truth is that capital could have been better spent on a better trade, something that you learned about later. And you could have used that capital. So even when you were down 80%, 85%, it's almost better to rip off the Band-Aid, right? And just be done with those trades and take whatever capital that was and start making 10%, 5%, 7%, whatever it is you're making gains instead of just bleeding out.
Yeah.
So, it's this weird emotional game that people play, and everyone has to play it in their head themselves. It's their own struggle. It's their own demons. It's their own fight. But you try to just give them that information to say, hey, look, if you can get yourself a trading plan, a strategy, proper risk management, you're already set up to be more successful than 80% of the traders that are out there right now that aren't using it.
That's right. And I'll add one other thing to that you see with a lot of beginner traders, and I was guilty of doing this as well, was being in 10 or 15 trades at a time, because you see things, you see things popping around you. E&J, for example, was another one. That was on the back of some fundamental news. Wabi, we've just seen it recently as well, did 45% in that one candle. RDN, RCN, all these different projects, and then we go, well, if I just hold it that little bit longer, it'll pop 50% just like the other one as well. So we've got a small amount of capital in a bunch of different trades, and one, it becomes hard to manage, and two, you might often forget about one, and you don't, do I have a stop loss in 7 of the 15 of them? Where do you draw the line on how many projects you want to be in, waiting for that one to pop, and maybe only 1 or 2 of them, like what we're seeing lately, will do those big candle wicks, but you've got to be right there to catch it if that's how you're trying to play. So just like what Ching has said, you're better off having your money in something that's a little bit more solid, perhaps something a little bit more liquid, and having a proper strategy on just one or two projects than spreading yourself across 20 different coins at the one time, because it's not going to work that way for you.
Agreed.
Yeah. All right. So moving on, you're the educator and the spokesman for like what I said beforehand, what I believe is probably one of the, not only the best tools that I've found for trading in a very long time, but one of the best crypto Twitter channels online, just for the pure content that they release and the value in that content. And I'm talking about Trading Room app. Tell us how that all came about. How did you end up becoming the spokesman and the lead guy for this project?
Well, I was just kind of doing my own thing. I had the YouTube stream out and the educational materials that I was making, and Trading Room reached out to me. He said he liked my educational material, and he said he wanted to talk to me. I said, all right. So as we talked, he said he was coming out with this app, this tool, and people are going to need to know how to use it, and if I'd be interested. And I said, absolutely, 100%. I took a look at it. I fell in love with it right away. I saw the benefits right off the bat. So I got to spend a little extra time with it pre-release and really understand how it worked, the fundamentals behind it, and just be able to express that information out to the public, hopefully in a way that, they could understand it easier, or, at least be able to use it, right? And be able to use it to their advantage. So once we did the first webinar, we had another one set up to do same that day, just to fulfill the people. And then it just became, you're just part of the team. So, you're going to handle the educational content. I handle questions on Twitter all day long. I handle questions on stream. I do interviews. I sort of just morphed into, I guess, I don't want to say the face of it. I'm just kind of like, I just talk about it. So if there's any questions about it, I'm usually the guy they'll reach out to, and I'll just sort of explain, what's going on with it, or maybe what they're seeing, or there could be something that is not working properly. So I'll be the conduit to the development team in order to try to resolve situations like that. So yeah, it just kind of worked itself out like that. And I love it. I mean, I couldn't be happier. I love being part of the team. I love being part of Trading Room. It's a very exciting project. It's way bigger than it is right now. So many more things are coming out. So there's just a lot of really cool things that are going to be part of Trading Room. It's fantastic right now in its own right, but there's more coming, which is just, even better. So it's just really exciting, and I love to educate. I got a passion for educating. I got a passion for learning myself. So I like to learn it, dive deep into it, really truly understand it, and then try to get that information out there. So it's been good. It's been really good.
Yeah, I remember I've been following Trading Room for quite a long time, and like there was this teaser, we're coming out with this app, we're coming out with this app. I think it was like, October or November last year or something like that. They were, we're coming out with this app, you're just going to have to hold tight. Oh, maybe early next year, And I'm sitting here with bated breath going, when is this damn app going to come out? And then it got released. And, that's when I discovered you and you're part of it as well. And then it almost kind of seemed like within a very short period of time, a lot of people cottoned on to this app and the benefits of it, and how many people were commenting on it and using it. And then like we were saying beforehand, tweeting you saying, I've just taken out this trade for 30%. Thanks Trading Room app, because of this, because of the price action scanner. It was brilliant. And like what I said to you, I personally use this every day now. Why wouldn't you? And the biggest thing that you said as well, which we'll dive into into a minute, is the time saving element.
Oh, yeah.
This is not a tool that you look at and go, right, I'm going to base my trade purely on what this says. But I'll jump in on the morning when I get up. I'll open up the price action scanner, the volume or the RSI, hit the daily tab, look at what's working, look at what not's working, and then I sort of jump into the charts and I look and I confirm what the scanner's saying. And a lot of the times it works. It works. You know, it's crazy. This is for now, from what I'm aware of, and for the short term future at least, is as a free thing. It's there, and you can use it. So use the hell out of it if you're not. And we'll put all the links in the show notes. But you know, tell us about it and run us through what this tool is and what the benefits are of it. And then we're very lucky to have you going to share your screen in a second and actually run us through what this is about. But give us a preface, give us a bit of a rundown on what this tool is.
Well, to break it down very simply, the main goal for the whole trading room team is to save time for traders, try to get them into quality trades, or at least pull up a chart that has a better possibility or probability of having a good trade, so that you can spend your free time that you would have been doing whatever you like to do, whether it's with your family or fishing or vacation or whatever it is. This allows you to save that time. And that is, I think, the overall biggest goal for all of us at Trading Room was we want to be able to save people time. To take it a step further, getting into quality trades or very quickly seeing something in trend and seeing a live fib attached to it on different cycles, a 1 day, a 3 day, a 7 day, a 1 month. So it really fits all types of traders, whether you're a scalper, intraday swing trade, weekly or bi-weekly trader. You have all that information so quickly in front of you without having to sort through a couple different websites or going down it like an entire list where you have to sort of piece everything together. It's just right there. So it's visually pleasing to see trend quickly, and then to notice different patterns, strong uptrend on long time frames, the 6 to 12, the daily, and then you got it like a pullback, a strong downtrend in the 5 and the 15. So clearly you could see, all right, well, there's a pullback. We're in trend, we're going up, but it's pulling back. So bang, I could just look over to the right and I could say, all right, well, we had a 37% peak gain in a 1 day period, and we retraced to the 65% zone. So I know just in that 1 day period, we broke the 618. Just on that one move, we've lost the 618. So the next target area would be 786. That's a chart that I could pull up if I'm a trend trader trying to buy the pullback. So now I don't have to waste my time cycling through all these other charts. I could just pull that chart up. I can say, all right, well, this is it. That was that big move. This is where we've retraced to. I say, all right, let me throw the fibs up. Sure enough, we lost the 618. Here's the 786. Okay, do I have any other confluence over here that makes sense? All right, we're in trend for 28 days. This is the second major pullback within this trend. Yeah, I'm going to go for it. And you're going to box it out, and you're going to put your buy zone in, and you set up your stop loss and rock and roll. So what I used to do was cycle through watch lists, and I would have a watch list with every Binance coin on there, and literally every pair, and I would just hit spacebar. Next. And then when I saw something interesting, I would dive in. So I all right, well, let me go to the weekly, let me check the daily, let me check the 6 and the 4, let me go to the hourly. If I'm looking for an entry, let me, see what the 30 minutes doing, something like that. And that's for every chart. I mean, for everyone that was interesting, I was spending 6 hours a day doing that, and which meant I could only trade on the weekends. So, my weekends would be sit in front of the charts for 6 hours and then try to do all this other stuff that I'm supposed to be doing, with my life. And then on the weekdays, I didn't have enough time. So I might be able to look at 1 or 2 charts, but that was it. Now, a few times a day, I could throw the scanner up and I can see what's moving. What's moving in 6 hours? Well, what are the big moves here? What moved in 3 days? It's Saturday for me, it's Sunday for some, but I can say what happened last week. Pull up the 7 day, see what's going on. We're a day away from closing out March, monthly candle close. So I can say, okay, well, what happened in the last 30 days? What were the big movers? Who's looking to come back down? If you're a weekly or a monthly trader where you only take a few trades a month based off of larger candles, daily, weekly, monthly candles, it's perfect. What was the big mover in 30 days? bang, in 2 seconds, I can pull it up and find out, who moved 200 something percent, 300 something percent. Like, it's crazy, but to find all that information before, you had to go through so many different avenues, and it was just, it just wasn't user friendly. This is very easy to look at. It's very, it doesn't take much time at all. Spending a little bit of time with it every day, a few times a day, you get so familiar with it, where you say, oh man, well, Wabi, it's only slightly green on the 5 minute. Yesterday it was dark green, so that means we're pulling back. We're starting to lose it, right? Like, yeah, that's how that works. So that's great, or no, it's starting to get pink. Like, oh, well, it's definitely pulling back. That's a play you could be making, and you'll notice those things change every day, and you'll say, oh man, like, all right, we're starting to clear out some of the pink. In the longer time frames, they're starting to turn green, and now they're starting to turn dark green. Okay, now we have a trend. It's something I can focus on. So that's the big thing is really saving that time, and then trying to get into some quality trades or pulling up some charts that have a higher probability of a better trade setup.
What a tease! All right, let's dive into this. Like I said, you're actually going to share your screen with us, which is brilliant.
Yeah.
All right, so here we are. Take it away, man. Show us the gold.
Yeah. So what you're looking at right now is the price action scanner in its proper form. What I do sometimes, I'll swing this over to another monitor so that I can at least have in front of me price action, RSI, and volume all in one shot. So this is something you could do if you got the screen real estate, and if you're looking to not flip back and forth, at least you can have everything in front of you. For today's purposes, I'll just keep it on the one and we'll flip back. So we started with price action scanner, which is what you're seeing right now. And it very quickly identifies what this chart time frame is doing, right? So if I were to say, all right, RCN ETH on the 4 hour is a strong uptrend. So if I were to pull up that chart, I would say on the 4 hour chart, if I was trading 4 hours, it should be showing a strong uptrend. And these are based off some complex algorithm that spits out these colors and decides what's slightly sideways, slightly bullish to what's in a strong uptrend, right? So light green to dark green. And then you have a light pink and a dark pink, which is sideways, slightly bearish, and strong downtrend. And then you also have gray, which you'll see every now and then, which is just purely sideways or not enough data. IOST, USDT is a newer pair, so not enough data for the 4, 6, 12, and daily. From there, I can see current volume. I can see the market cap. So if you're one of those guys that doesn't want to trade anything super low market cap, you can sort that right here and just say, all right, I only want to trade high market cap coins, just like that. Everything on here can be sorted, right? And that's something that's just so quickly, it could be so quickly utilized. Say, all right, if I'm only interested in trading higher market cap coins and I don't want to deal with anything super low, let me see what we got going on. Say, all right, well, that's good. I got BTC, I got ETH, XRP, EOS, obviously all the top 10 coins are going to be on here. But if I want to trade just based off of what's moving on the daily chart, so I just click on the daily. Now I'm sorted by dark green, strong uptrend on the daily chart. And I can see all of these coins, all of these pairs are sorted out for me. And if I only want to trade tether pairs, that's fine too. So I go to tether, right? And then I could do the same thing right here. Now the only thing on the tether pair that has a strong uptrend right now is BNB. So I can look at this and I can clearly see from the forward to the daily, we're in a strong uptrend, right? But we're sideways, slightly bullish, 15, 30, and hourly, where we just turned this dark green, right? So this tells me that we're getting steam, right? Steam is coming back, right? So we're in a strong uptrend on the longer time frame. We clearly had some type of sideways pullback, less than stellar, strong moves on the lower time frames. But since the 5 is starting to push up again and it's a strong uptrend, well, then we probably already started making the move back up. And if that's the case, this might be a chart I want to get into and say, all right, I might want to buy that pullback and get in on the trend. I can look over here and say, all right, well, in the 1 day, it's about 5% up, and we've lost about 0.5% of that 5%. So not really a lot going on here, but a 5% move up is good, is really good. Barely any pullback is okay, which means we're probably currently still in trend, which is excellent. So that's one way I could sort that out. If I'm a scalper, I can go down to the 5-minute, see what's getting pulled back right now. The pullback right now, ICX USDT, strong downtrend, right? So sideways, slightly bullish on the larger time frames, strong downtrend in the 5. So this is something I could probably watch and wait and see when we hit a target area low. It doesn't seem to be downtrend enough to pull the 15 and the 30 down with it. So this could just be a quick correction, or it could just be a little nosedive down where you can get into it and then ride it back up. So again, I look at peak gains, see, all right, well, we're 6% up, 77% down from that 6. So the 6% move we made up, we're already approaching the 786. So if I pull that chart up and say, well, we always find support on the 786 with ICX, with that pair, that's something I might want to consider. I might want to get in, even if it's only just for a couple percent. I could get in and out on a 5-minute chart, watch this reverse, swing it back up, and maybe I'm in the trade for 40 minutes. And maybe I pull out 2, 3, 4, 5%. That's great. You know, that's a successful trade, and move on to the next one. So there's a bunch of different ways to sort it, a lot of different ways to look at it, a lot of different patterns that you'll start to recognize with it, you know, as far as what's strong on the 4-hour to the 6-hour, and then, you know, sideways still on the longer time frames and the shorter time frames. So ZRX is a good example. So this had just a small move up, right? But it pulled all the way back down almost at the 886 on a daily. I say, all right, well, what happened in the month? You know, we're just about to close out March. What do we got here? I'll sort it by peak gains here, and this will give you an idea of what moved. 550% EVX ETH and BTC, both pairings, 525, 550, right? But lost half of that, right? So of the 550, right, you lost half. So you're about 225 something percent up on that, right? Or my math is terrible. So that was 270 something percent. But regardless, I'd be able to look at this and say, all right, these were the big movers for the month, right? The last 30 days. So if I'm trying to buy a larger pullback, I might pop that chart on and say, what's shaking with this? Are we still in an uptrend? You know, the 12 and the daily still say we're good. We lost some steam on the 6 to 1, right? And then we got slightly pink on the lower time frame. So this should be pulling back a little bit. Maybe it's enough to buy the pullback and continue the trend. If I see something like Wabi over here, that's almost all green, it's almost all lit up, 171% on 30 days, and only lost 23% of that 171. So that tells me it's a stronger uptrend. You know, for all the pullbacks that it did have, it's still currently much better off. It's much healthier of a trend because it hasn't lost so much on the larger scale. So that's price action scanner in a nutshell. Swinging into the RSI scanner, this is for anybody that's familiar with the RSI, for anybody that uses RSI either as confluence or as trading strategies, because there are plenty of them that'll use RSI for whether it's breakout plays or swing failures or entries and exits. There's a bunch of different ways you can use it, but let's say you're swinging, right, and you want to look at the smaller time frames here, and you want to buy, right? You want to go long. So you can sort it in the 5 or maybe the 15, and you could quickly take a look at what has crossed over the 30, you know, what crossed under. Well, data ETH is sitting on the 12, right? So clearly pretty far down the list here. And now we're looking at 3-day moves, right? Minus 11 and 31 back off of that minus 11. So this is a chart I might want to look at if I'm looking for entries on the much smaller time frames. Something like a 5-minute, 15-minute, I can sort by that as well. and I can say, all right, well, nothing, nothing's crossed over on the 15, so we're straight on that. If I go the other way with it, and I'm looking to sell, this could be because I'm already in a trade, and maybe I want the first indication to get out of that trade to realize my gains. Say, all right, well, bread, on the 5 and the 15 is starting to approach, has already crossed over 70. And you'll get further and further and further away as the time frames get larger and larger. So this is the first indication, right? 5 minute 82, 15 minute 75, 30 hasn't crossed yet, is probably the next to cross. So this is an indication if you're trading 4 hour and daily, sure, you haven't crossed the 70 mark yet where you might want to think about selling, but you at least have an indication that that may be the trend. You might be headed that way. And if you are, you might want to start thinking about what you're going to do to get out. Where do you want to sell? Same thing. So BNB, just on the 15, we could see the 6.7 and the 6.9, right? You're hovering around the 60 mark on the lower time frames. On the higher time frames, you're still over the 50 line. So that tells you a few things, right? If you're over the 50 line, it's generally considered, bullish area. And if you're under the 50 line, generally considered bearish area. So if that's your type of confluence and you're looking to get into BNB based off of what we saw on the price action scanner, you might feel a little bit more confident about this. As you can see, everything's over the 50 lines. You say, okay, that's not too bad. Even though we got a little bit of a pullback, right? Of the 5% we lost, we gained 96% back on a 3-day move. So yeah, is it sideways? Sure. But are we above the 50? Yes. So different ways to look at RSI. And of course, if you're a daily trader, you always want to just get an idea of where you're sitting, right? If you just cross over the 70, that's fine. But that's on the 6, right? What happened on the 12? Well, now you're around 73. What about the daily? You're on 82. So it's all pushing up. Eventually this will get exhausted. And when it does get exhausted, it's going to start coming down. Generally speaking, RSI starts coming down, and then you're going to have prices going to match it, unless you have some type of divergence. And that's something that through RSI, you'll learn. You can use these as indications of, because I'm making these and I know that I'm getting into the higher range here. If price was doing the opposite, then I could kind of visually see divergence without pulling the chart up. Although it gets a little complicated and it does get a little messy, it takes a lot of understanding on what you're seeing here and visually looking at this multiple times a day to really get a feeling of, all right, well, the move was up, but we're pulling back. We crossed over 70. Okay, that's good. And this is a chart that I want to pull up and see if I got any sort of RSI strategies I could play on that. And then moving into the volume scanner, this was the latest one that we added here. And this was really sort of dedicated to getting into healthier trade setups. So using price action and using RSI and saying, okay, this is a chart that I want to pull up, but hey, is it even liquid? Is this something I can even get into and be able to get my trades executed? Because more importantly than anything else is making sure your stop gets hit if it goes the wrong way. You don't want to get stuck in a trade and not have your stop get hit, and then you're beat, right? You're just holding that coin forever. So you can sort this by the liquid index right here, and this will tell you sort of what is happening in the market. At least on Binance, it'll tell you everything as far as how liquid you are compared to the market cap. So compared to a 7 million market cap, liquid index 150% of that. So you got about 10 million is being traded just in this zone right here, right? So if you look at fuel BTC and you look at the 24-hour, this is an in comparison volume. So 2,490 Bitcoins worth are being traded currently. Yesterday, whatever it was, this is 59% more than what it was yesterday. Now on 3-day average, this 2490 is 111% more, right, than it was over the 3-day average. And again, the 7-day average. So And then we threw in the D1 move just so it was convenient. But this will give you a quick indication. I mean, I'm talking seconds. Click the button, find out what's going on. 2,451%. So via ETH, with 2,000 Bitcoins being traded in this pairing currently is 2,451% more than it was the day prior. So tons of volume is coming into this particular pair. Same with the BTC pair. So you could see ETH is trading more heavily, right, than BTC. Now on total Bitcoin wise, it's only a difference of 32, but the pairing is more popular, or at least gained more interest on that ETH pairing. So if I was going to make a decision, do I want to trade via ETH or do I want to trade via BTC? Just based off of this, I would say, well, you know, I certainly got a lot more going in here who just came in, but the liquid index tells me I have far more on the BTC pairing. So that's where I'm going to trade, because that's where I'm going to get my entries, no problem. That's where I'm going to get my stop loss hit, no problem. And I don't have to worry about getting skipped over or being pushed back down into the order book where my orders don't get filled. So this gives you that very quick glance that we talked about earlier of just making quick decisions to get you onto a chart that you feel more confident about, or that has opportunities for you there. Looking at it the other way, right, real quickly, 619% down. So that means that this 149 Bitcoins that are being traded on QSP BTC right now is 690% less, right, than it was 24 hours ago. So the deal with this is, if you were in this trade and it was pumping and it was doing great, and then you noticed how much less volume you were currently trading with, right, that might be an indication that your stops might not get hit. You might want to think about getting out of that trade, especially if you don't have anything to back it up. You know, if there's no indications that volume is coming back, this could get worse and worse and worse, where you'll never get your stops hit. And that's a clear situation where, you know, KNC was a great trade, you know, 3 or 4 weeks ago. You could see just currently this 354 Bitcoins being traded now, 331% less than it was yesterday. So that's kind of a big deal. If you were looking for KNC to make those moves that you thought they were going to make, well, you got a lot less trading volume in there now. Where did it go? You know, did it go back to USDT? Did it go back to BTC? Did it all go to via ETH? It could have moved around 1,000 different ways. The important thing to remember is it's no longer in that pair, right? So it's a lot less. That 354 is a lot less than where it was yesterday. And if that trend continues, then you're going to have a tough time getting your stop losses hit, or just trying to exit the trade. If the order book is too thin, you know, you're putting yourself into a really bad situation. You want that order book to be thick. You want the exchange to be liquid. Now you're showing 3% liquid on a market cap of 47%. So, you know, that's not great, but it's certainly enough, you know, just between this trading pair to get in and out of a trade. But again, it just gives you the idea that, hey, I was looking to trade, you know, whatever, it was BNB, right? So BNB USDT. Again, so everything up here is sortable. So you just click coin pair, you go into alphabetical order, and then so BNB USDT. So I can see, all right, well, 3% down, right? That's okay, 24-hour, but you know, the currently trading 17% on the 3-day average, right? What we're trading is less. 17% less than what it was for the 3-day average, and 19% less on the 7-day average. So it's sort of trending down. Now that's one more thing I have to consider when I pull up that chart. Say, all right, well, you know, I got a little RSI information, I got some price action and trend information, I got some peak gain information. Now, is the volume still going to get me into that trade, or is this enough to say, hey, you know, if this was 40% or 50%, on a pair that's so big, right? It's just a massive market cap with ridiculous volume being traded. 3% on something like this, I'm not too worried about it. There's plenty of liquid going around for this particular trade. 1.73% liquid index on 42 million something. It's too much to do math for, but it shows you quickly that you're in good shape, or that you're trending in bad shape. 260% loss, 68 is that much lower. So BNT not as healthy. 3% is okay, 4% is okay, 444% losing on Blue Zell, right? That's tough. It's tough to convince me to get into that trade, especially if this is going down. I might check it later today if it's at 500 and then 550 and then 600. I'm not getting into this trade at all, no matter what the setup would be. Maybe the market cap's just too low for me and I'm not interested. Again, if I just want to go through market cap coins, say I'm only interested in trading, the highest market cap coins, or maybe only the most liquid coins, then that's easy too. I can get right here. The most liquid pairings on Binance currently are these all right here. Fuel and Wabi, VIA. You can see BTC, 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 and then ETH. All right, well, ETH is moving on Fuel. That's something to keep in mind because it's also moving on BTC. So you get a little confluence right there as well. And then, of course, you could see, what type of volume you're dealing with, what type of increase. So that rounds out the three-way module package that we have currently available. And, like I said, there's more coming down the road. But this is what we have that's on the table as current as today.
Wow. That's so good. So good. So there you go. You just got pretty much a 20-minute masterclass on one of the best tools online, 100% free. Utilize this. And I'll just get you to run through a couple other things very quickly as well. You have a number of webinars upcoming, a number of webinars that you've already done as well. You've got information there for blogs. There's upcoming news. There's market cap information as well. You've got your day and your night settings if you don't like the dark setting. Right. Chingas is constantly running webinars, it seems, quite a lot. And you can find the replays of those online and on the site here as well.
Yeah,
I think I saw you've got 5 or 6 webinars upcoming as well.
Yeah, so we did a bunch of these live, right? We did the Fibonacci one, the price action one, which was all great. And then these we're undecided on whether we're just going to do videos or if we're going to do webinars again. We're trying to feel out the community to get a better grasp on what they prefer. And the last one we did was I think we did the RSI one. And the idea behind that was, hey, why don't you put it on YouTube, let everybody watch it at their own time, their own convenience, in their own, time zone. And then we'll do like a live Q&A if there's a need. If people are confused about it and they need some questions answered, then, gladly we will talk about it. And it turns out that the RSI video was fine. We got enough feedback on that where putting it on YouTube was more convenient. Instead of waking up at 3 o'clock in the morning and try to make a webinar that's scheduled, for them it's 3 in the morning. For me, it's 6 at night. It just wasn't working. So yeah. We'll see. We're still, we're still sort of at the service of the community. We try to appeal to as many people as possible or make it as convenient as possible. So doing the videos separately instead of the webinars does allow me to sort of, get better audio and film it a little better instead of being based off someone else's platform. But, I'm open to anything. And that's our mindset moving forward is whatever the community sort of decides, we'll go down that road and we'll explore it. And whatever seems to make the most sense for the most people is what we'll do. So after RSI, I believe the next one we're going to do is moving averages. I think we're going to dive a little deeper into moving averages and how they work, what the differences are, what kind of trading strategies you have with them, how to use them as support resistance, the difference between, an EMA and SMA, weighted average, the whole 9 yards. So we'll do two things. We'll do one that'll align with the module, and then we'll do one as a, if you really want to learn it, I'll dive deeper into it, and you'll have the option, right? You can go to the module one, which should be pretty short, quick, and easy. And then if you want the deeper dive educational part, you'll be able to learn that as well.
That was brilliant. Thank you. Thank you. Even I learned a little bit there, and I use this every day. So
good. I'm glad. Yeah. I'm glad.
All right. So wrapping up, a couple of the last questions I want to ask you. You're a trader, obviously, and this is something that I ask all of our guests. What are your thoughts on BTC and crypto for the remainder of 2019? How are you going to be playing out, and sort of what do you think?
Well, we don't speculate too much. We don't dive too deep into the future. We sort of concentrate on price action. So the overall bigger picture, just on a personal basis, I feel good about the space. I feel good about the pairings. I do like some projects. I do not like some other projects. But that being said, on a trader's mindset, sort of look at the candles that are in front of me. And that's kind of what I'm basing my trades off of. So as far as trading, it's mostly price action, and it's kind of like from a 1 hour to a 4 hour to a daily on my longer trades, and 1, 5, 15 on my scalps. But that allows me to filter out a lot of the noise of the bigger trend. We're going down, or we're going up, the bull run began. I'm not too concerned about that. I look at the trend, I look at what the candles tell me, I look at the time frames that I trade, and I look at the bigger picture. I look at the macro view for all trades already. So like we were talking about earlier with Wabi, it's clearly in an uptrend. Does that mean it's actually in an uptrend? Or look at the bigger picture, right? If the bigger picture tells you this is just another higher low, then I'm not overly concerned about that. And I'm certainly not projecting up, to a 423 based off of those current moves. So it's something to keep in mind. It's always some type of market structure or some historical support resistance that I'll look at, base these trades on, or these profit targets set on, or stop losses for that matter. But I don't, if Bitcoin stays sideways for the next 8 months, then it stays sideways for the next 8 months, and I'll continue to trade just the way I trade. If it goes up and it's 20K tomorrow, I'm still going to continue to trade just the way I trade. And the same thing if it goes down, if it goes down to $1, I'm still just going to trade the way I trade. I'm going to look at the candles that are in front of me, and I'm going to make those decisions based off of what I see, what's happening right now. There are situations where you could be heavily influenced on a particular pair because of what Bitcoin does. So I'm always cognizant on what is Bitcoin doing, what is it doing currently, and what is it doing sort of on the weekly or the bigger picture. And that may add to my price action. That may be one of those things. I had that little tick in the back of my head that says, all right, well, let's just be a little bit more careful with some pairs, Litecoin and Ethereum. They tend to follow Bitcoin fairly well, and they have for years. If that trend continues, I don't know. But for now, it seems like they like to sort of ride each other's back for a little while. So you need to be aware of that. But as far as projections for what it'll be at the end of 2019 or 2020, I have no idea. Nobody knows. That's the thing. You could speculate all you want based off of fibs or extensions or patterns or projections or GAN lines. You could do 100 different things that'll get you to 100K, or 100 different things that'll get you to $1. But the fact of the matter is, none of that affects my trading today. And that's what I focus on. I focus on making the trade for today, get in, make the trade, profit or stop loss, and get out and move on to the next trade.
Great answer. All right. And second last question. If you could go back and give yourself 2 to 3 pieces of advice the day you decided you wanted to be a trader or started trading, what would you tell yourself?
Risk management, lose the emotion, and understand discipline. Those would probably be, and don't start trading. Probably, that would probably be number one. Yeah. Don't start trading until you learn a little bit, instead of just jumping in with 2 feet and being forced to learn. Learn first, and then move in. There's a huge debate on paper trading to no paper trading. I don't have an opinion either way. I just know that when you got skin in the game, you feel it. And if you're paper trading and you lose $20 million, it doesn't quite have the same effect as if you just had to, mortgage the house and sell the car and possibly a few kidneys to make up for it. So it's for me, it would really be like, don't start trading until you at least understand enough to be comfortable with it. Really rip away the emotion. I mean, try to understand what it's like to just trade like a machine. And having the discipline and proper risk management. If I had those things from day one, I think things would be very, very, very different. But it's fine. I went through all the mistakes most traders go through. I went through a whole bunch more that some people never do. And I really aim to try to help people avoid doing some of those exact same things that I did, based off of experience. Like, listen, you don't have to listen to me because this is what I'm saying, but let me at least throw the information out there for consideration. This is what I did. You don't have to do that. You don't have to go down that road. You can save yourself a lot of heartache. Just throw a stop loss on. That's all. So that's kind of it. If I had those things from day one, I think things would be a lot more different. But I don't mind going through them, feeling that burn and being forced to change my ways and being forced to learn really set me up in a different position where I can look back on those scars now and say, all right, this is the difference. That's where I was, this is where I am. And I feel a lot better about that.
Yeah, what a great way to sum it up. I really appreciate you taking the time to share not only that, but everything else you've done today. Thank you so much. And, if people want to find you or connect with you online, where can they go to find you?
Sure. I mean, I'm on Twitter, so ChingasX on Twitter. Of course, you can find the Trading Room app. You can find Trading Room app on Twitter. Tradingroom.io would be the scanner and all the other information on there. I stream on YouTube. I stream on Twitch. When I stream on one, I stream to both, so it's one or the other. I have videos on BitTube and YouTube. Yeah, I mean, that's mostly it. I'm pretty readily available on Twitter. That's where at least, a few times a day I'll be able to log in, scroll through, and try to answer some questions and talk to some people. And I try to stream as often as time permits. So there's no routine, but I do try to always do the daily candle close or the weekly candle close. So I do try to at least get on those time frames. And then, yeah, I mean, I'm around, I'm in the space, so I'm not hard to find.
Yeah. And we'll link to everything Trading Room and you, Chingas, as well, your YouTube.
Yeah, awesome.
Connect, just head to unitytradinggroup.com and we'll put it all in the show notes. And yeah, once again, man, thank you so much for your time. I really appreciate it.
Yeah, it's my pleasure, man. Thank you for having me. I really do appreciate it.